Now, the war between Iran and the United States and Israel has already impacted South Africa. The effects will be felt at the pumps starting tomorrow as fuel prices go up. Now, the price of petrol will increase by 20 cents a litre, while diesel will go up by over 60 cents and paraffin by over 40 cents per litre. The Department of Mineral and Petroleum Resources says the increases are due to geopolitical uncertainty related to this weekend's eruption of hostilities in the Middle East. It's also warned it could disrupt the supply of crude oil. To unpack this, I'm joined by Chief Economist at Pan-African Investments and Research Services, Dr. Iraj Abedian. Dr. Iraj, thank you so much for the time. Really appreciate it. One also holds commiserations because we do know that you are one of Iranian descent as well, and one can imagine the stress and strain this must be putting on yourself and your family. So good morning and heartfelt to you as well.
Thank you very much. I very much appreciate the sentiments, and I'm grateful. And thank you for the invitation.
Yeah, I mean, let's just talk overall about the impact this is all going to have. And I think let's start at the source, why don't we? And talk about, oil supply globally and how that could shift, considering that even the Strait of Hormuz gets a shutdown in many ways because of this.
Will not be shut down or closed down for a simple reason that just about 100% of Iranian imports and exports are done through that strait. So it's not to anybody's interest, Iran, Saudi Arabia, China, anybody in the region or globally, to shut the Strait of Hormuz down. Will it disrupt? Absolutely. At the moment, as Americans are busy literally sinking every ship, every boat, every submarine, everything naval that the Iranian Navy has, and it will continue in the next 2 weeks. Then there will be a couple of days of cleaning all of that. And therefore, as far as the oil supply is concerned, I do not believe there will be any long-term disruption in that regard. However, if the war persists and drags on and it spreads into the region, you could have medium-term, long-term consequences. I doubt it very much, but we'll have to see. War is unpredictable, and you're dealing with a very this kind of irrational but extremely zealot and fanatic group who are now like a cat that has been caught in a corner. They will fight back. They will fight back until the last breath, and that may be a kind of a scorched earth strategies, not just within Iran, but within the neighboring countries who are seen to be allies of the United States and indirectly supporting Israel. So countries like Saudi Arabia, Qatar, Kuwait, UAE, all of these may well become the target of scorched earth strategies that the Iranian regime may end up doing. But of course, that's something that the United States and its allies have predicted.
Yeah.
They didn't think it would happen, but when it happened yesterday, we can see now there is a ramping up of attack on the Iranian missile centers. And then literally the next 3 days, we will know whether it happens or not. And my own analysis, I'm not a military analyst, but listening to all kinds of internal, external analysts, I believe that in the next 3 to 4 days, that element of the regime, meaning it will run out of missiles and military drones, because day and night, American and Israelis are locating these depots and blowing them up, and the Navy being sunk and destroyed. Therefore, my own prediction is that the supply will resume from next week onwards, but instability will continue.
I mean,
are very important. Yeah, sorry.
Yeah, does that instability mean you continue to see capital flight out of emerging markets, or is it just primarily out of the Middle East? So people stop investing in those countries. That's just one part of it. And then the second part is, does that force the oil price to then climb? Right now, what's it, 78, just under $78 a barrel. We haven't seen a spike from 72 to 78 that quickly for some time, but is $100 a barrel even a possibility here?
I doubt it very much for the simple reason that possibly the most sensitive factor that President Trump is watching for his political base back home in the United States is the price of petrol, price of fuel broadly. Therefore, they will do everything possible with the help of their allies, especially Saudi Arabia and all the countries in the region, to pump up. The minute that they clean this coast, as they say in Persian Gulf, which will not take more than a week or so, they will start pumping the supply into the global market to make sure that that price back at home is stabilized. So I do not believe, unless the oil reserves, the oil facilities are blown up, which is a possibility, with low probability, but it is a possibility. We're not going to get a sustained rise in the oil price. That's the other side for us back in South Africa is exchange rate. We need to note that the price that we pay for petrol is the product of both international prices and exchange rate. To the extent that dragged on war in the Middle East, instability that comes from it, not just from oil, but broadly, and it could spread to Europe, it could spread to everywhere because of the sleeper cells that the Iranian Revolutionary Guard or Islamic Revolutionary Guard has. It could spread that way and cause instability, in which case, not just the price of oil, but foreign exchange rates, financial markets more broadly will become volatile, and our exchange rate is exposed to rapid depreciation because of emerging markets and because of a whole lot of other factors that back at home we have to watch for.
Knock-on effects on things like food inflation, given higher logistics costs at play here. How massive could that be, and could it be sustainable? I mean, sustained, so over a longer period, we see prices continuing to rise very quickly.
I believe if this instability in the price of oil, as well as the broader geopolitical instability that I mentioned, if it drags beyond a month, in other words, if Americans cannot wrap up the situation from a military point of view and from clearing the logistical supply of fuel, and that means they will then get into a longer-term kind of war of attrition, very much like what the Russians did. The Russians entered Ukraine thinking that within 6-7 days they'll be over and they'll be in charge. The war has those type of unpredictable aspects. However, if it's a short 1-month event, we won't feel the impact that much, the multiplier effect or knock-on effect. However, if it continues, if it goes beyond the months, and it's now a war of prolonged, unpredictable, and who knows how and when, then you will have two factors kicking in. The price of oil will begin to respond, which is not good for us, and our foreign exchange instability, the product of the two will bring imported inflation, and not just price of food, price of supply. Agriculture depends on a lot of diesel, mining, everything that you want to move in our vast country in South Africa is affected by the price of fuel, and therefore you will have not just transportation, but price of fertilizers, price of chemicals, everything beginning to slowly but surely ramp up, and that will inject imported inflation into our macroeconomic conditions.
Yeah, and I mean, that creates a difficult environment, one imagines. Do you see parallels here, though, with past conflicts and the economic fallout that comes from it? I mean, let's not forget Iran-Iraq war itself and how that impacted oil prices. Or is today's oil market especially far more resilient? Because there's always been an oil glut over the last 7, 8 years or so, considering the amount of oil that is in the market?
Yeah, from an energy point of view, from the oil market point of view, the market is very different from 10 years ago. It's really the broader impact on global trade, global stability, and investment flows that will begin to be a lot more consequential than the price of oil itself. You will see, for example, now gold price shooting up. You'll see other commodities responding. Some will be negative, some will be positive. So I'm more concerned about the broader embedding of new geopolitical risk on the scene. We already have enough risk at the global level, and adding this particular one in the Middle East, unlike, for example, in even Russia and Ukraine, if this becomes a protracted instability, a war of attrition, and a kind of a stalemate, it will have two huge dimensions. One, the humanitarian side will be phenomenal, far more than what we've seen before, even before Iraq and so on, or Libya, or Afghanistan. And they will have instability that will become a lot more systemic in a very critical part of the globe from an energy point of view for the medium to long term. And I think that's the risk that we need to manage. And one would hope that the analysts, geopolitical and military analysts in the United States have paid enough attention to that.
Yeah. All right. Reserve banks or central banks will begin to look at this as a permeated risk as well. Does this ultimately mean you see a delay in interest rate cuts, if there were to be any, in the coming months, or would how long this goes on for determine that?
Yeah, that's both. I think for now, no matter what happens, the Reserve Bank will sit on its hands, as they say. We were expecting 2 further cuts this year. They will definitely, at the very least, they will delay it by 2 months to make sure that they don't create additional instability, which is not good for our economy. We would like to see interest rate cuts earlier than later, but they will have to delay it. And if after 2 months this hasn't come to a clear conclusion, then the entire expected 2 interest cuts will have to be put on ice for now.
Yeah. All right. Dr. Iraj Abedian, appreciate the time. Thank you so much for speaking to us this morning. And I suppose the impact could be felt so far and wide, but we'll see as progress goes. Dr. Iraj Abedian from Pan-African Investment and Research Services.